Good afternoon, everyone. This is Chrisi from SolsticeATR and Balkan Capital. I guess I got everybody on a Saturday afternoon. Hope everybody's enjoying their Easter long weekend. I know we are on quarantine. Hope things will work out and everybody gets back to their jobs. And at the same time, all the kids go back to school and things will work out and they'll find a cure. I had put on this chart the combination of the four instruments, and I wanted to go over those four in detail to give you an idea what is the outcome in the following week that's coming out on Monday. And I have two great ideas. One is an equity trade, one is oil, one is gold, one is in NASDAQ 100. The most important thing is to recognize the move from the high to the low due to the fear and the panic in the market due to the coronavirus, that pandemic that we had. Everybody was expecting to create another H pattern like we did here, and we fell further down. Unfortunately, we U-turned Monday, Tuesday, Wednesday, Thursday before the holiday, and Friday was Good Friday. We came back to the 50 Fibonacci. F5 is 50, F3 is 38.2, and the F6 is a 61.8. And at the same time, on those four combinations, we have the 50 simple moving average. Most people will call it a moving daily average. It's not an EMA. Institutions would look at it as a place where to get. If you're above it, you're more bullish. You're below it, it's more bearish. I use an 18 simple moving average and a 50 for most of my entries and exits on most of my trades on the short and long term, but there are lagging indicators. Whenever they cross, it's considered to be a short. Whenever they cross on top of each other, it's considered bullish until that trend changes. So that's the full combination. Let's take a look at the weakest one out of the group, which is the small cap / RTY. And what I'm going to do is I drew a Fibonacci. Fully would have grabbed this area here to this area here. If you notice, that's the 100%. That's our 61. That's our 38, and that's our 23. And we are still a little bit lagging. We are right on the 38.2 fib, just closed right above it. And if we look at it as an overall trend, the Russell in the last 2 days on Thursday, Friday was, Wednesday, Thursday was very bullish. I put an up channel here. We have a sharper trend going up this way. And at the same time, it's got quite a bit of distance to go from here to the 50 simple moving average or the 61.8 or the 50 Fibonacci, the retracement of that whole move coming back down. So more importantly, understand how to trade. Look at levels, look for support and resistance. Some people call it supply and demand zones. Some call it consolidation areas. When the trend does change, the trend is your friend. Be on the right side. Don't be biased to one side. Trade what you see. So that's the small cap. And you can see this has quite a bit of distance to get to the 50 fib, the 61, and the 50 SMA. So let's go right now to the Dow Jones Industrial Average, YM. And once again, the Dow Jones Industrial Average is in a similar situation, but it has tapped into the 50 Fibonacci. It still haven't got to the 50 SMA or the 61.8. This was the first day on Thursday. It went, looked above it, and closed a little bit right under it. And it is a little bit bullish. So the trend, we came back 50% of the move from high to low. Let's take a look at now the. Remember, the Dow has Apple, Boeing in it, Chevron, ExxonMobil, Caterpillar. So look for the companies that are very strong in the direction of the move to trade the 30 companies that are in the Dow if you like to. Or you like small cap, you can. Or you like the NASDAQ 100. Let's take a look at the NQ. This NASDAQ 100. So if I look at the NASDAQ 100, on Tuesday, it looked above, came back in. Wednesday, this was Tuesday, came back in. Wednesday took off, and on Thursday, it stayed, elevated in the 50 Fibonacci. It's in an up channel. We got a faster, sharper cone in here. we cleared two major channels. We cleared the major one down here, and we cleared the secondary down here. Now we looked up, we double topped a little bit above. We're still coming back to a major trend from before on the monthly chart. If I'll go back to the monthly or the weekly, you can see the trend coming back from way over there. I'll go back, from daily, go to 20 years. I'll show you the monthly chart so you guys can get a better feel of it. And we push OK. If you notice, that major channel that we have is down here. We never touched it, and the secondary was from 3 years ago. If I go 3 years, it should show it. This is before the election. Just look at, I know this has a lot of lines here. If you notice, we are coming back from this area, came back and retesting that upper channel. So keep an eye on that level for continuation. I'll do the 4. Okay, there's my mouse. And very importantly, understanding how to draw down channels, breakouts of those channels, and up channels in the direction. They call them linear regression channels, or you can just grab a tool that has a line and you can connect one point to the second point when it's trending up, and you can correct when it's trending down, one point to the second highest in the direction of the down, which is the lower high, higher low, higher high, higher low, continuation to the upside, unless we break here and come back to the 38.2 Fib. So as far as we know that the NASDAQ is a little stronger, trade what you section of those moves. Let's take a look at the S&P 500 /ES. It is a similar situation. If you notice, it came back, tested the 50 Fibonacci. We cleared the 38. We continued higher. We are in an up channel. We got a sharper cone, so that way we don't fall into it. We have that 50 simple moving average in the 61. And about a week ago, I drew these two ovals. I said the scenario, if we cannot hold this channel, we fall down to this oval here, which is the market support. Or we go back to this channel here, the 50 Fib, and I drew those ovals on both sides of the chart. You can go back to the prior week, and I drew that yellow oval here, and I did one at the bottom at the same time, which is a similar distance. I'll zoom down to show you where it is. They still marked from before. So the trend didn't go to an H pattern. It ended up to be a bullish pattern. What people expect, to happen doesn't happen, and it does the opposite. Trade in the direction of those moves. Don't trade in opposite direction. What I'd like to do here is kind of go down and look at it in a faster time frame and break it down a little bit more for you. But what I want you to recognize, there's an opportunity in oil as well as gold, and I want to look at one equity company that you guys can look at the same time, part of the NASDAQ and part of the S&P. Let's go first of all, take a look at gold GC. We're going to go down to here to GC to show you what has happened in GC. I'm going to go to the three-year weekly to show you what has happened. In the 3-year weekly, we continued higher above that 1440. We came back, retested that area, if you can see it, and all of a sudden, we had a V-shape and continuation higher where everybody was thinking, oh my God, these two channels, and we did these two channels last week, and I said, look, it may be weaker because we had 3 tops. If it doesn't continue and break out, it may come back in. And what did they do in gold? It continued higher. Let's go to the daily chart to show you. If you noticed on the daily chart, we had those 3 tops. 1, let's call this a 2, at 3, and eventually the 4th one, they tried to come back in. They eventually broke that 1692, 1705 area, and we will look higher. If there's going to be continuation and coming back in, remember, gold trades in a very wide range. You see, this is support. This is resistance. If I take the overnight action off it, there's a little bit of gaps. We can do either. If you want to own the gold physically, you can own the contracts, or you can own gold physically, or you can do puts and calls on either side of the fence in order to collect either premium, a calendar spread, and continue higher. What I'd like to show you is that 50 Fibonacci here and that 61A. You can go out 1 week because it's not going to come back down here and fill 100% of this gap, because everybody's thinking this is a V shape. It's going to come back and retrace 100% of the move back to the bottom of this channel. I think, between the 38 and the 61A, there's an opportunity to do a call put. You do the sell the put and you buy the call to the upside to finance it. That way you can collect the premium from the put. In the same time, expecting the outcome, like in a month, 2 months, 3 months, the calls will continue higher and give you a higher price in that option. So you're basically financing the call by using the puts, the selling the puts to collect dividend. And I don't think it's going to come back to that 61. You can go out, 2, 3 weeks out and collect that premium. You can do it once, twice, 3 times, because I don't see it coming back to that 61A. Possibility of the 50, but that 38 is going to act as major support even if it comes back here in 5 to 10 days. I don't expect it to fall below the 50 Fibonacci. That's on gold. Let's take a look at CL. That's crude oil. Remember, crude oil from years ago, it got really, really, really decimated a long time ago. And what I want to show you is on the weekly chart, we fell through those channels. See, that was a prior long time ago on the monthly and weekly charts when we fell down. I'm going to go out, 15 years. And instead of weekly, let's go to monthly to show you where we were. And most of this area, we fell through that 26 before. And before that, we fell down to the $17 in 2000, 2001. So if we go 20 years out, I know I have a lot of lines, don't look at them. See that 1720, I would like to buy oil, couple of contracts, in the direction of the move. Once we fall down through that $20 range, I'd like, to come back to that 2000, 2001 when, we had the Twin Towers. We came back to 2001, 2002. That was the bottom of the oil, and it rallied back to 147. We tried to clear the 65, 68. A couple of years we stayed in the $80 range. Then we fell down, came back to the 70s. We couldn't clear for the last 2 years, that 65, $68 range, and we fell further down. I'll go to the daily to show you how it looks like. So on the daily, when we got back to that 65, $68 range, we tapped into it once here on the 68. We tapped 1, 2, 3, 4. This is because the Saudi, the Iran, remember when they hit the oil well, we had that dump, we had the lift, we came back down, we couldn't get above that 54. We had a lot of problem, and all of a sudden we fell and we got that big gap here. I'll put that box there. And if you see in this consolidation here, what I'm going to do is zoom in to show you what's going on, below the, that 50% fib and that 38.2. That's going to be a very critical area when we're going to come back up. That's my target, first target, and the second target would be to fill this gap. I'd like to see, we touched oil at the $19.27, and Trump tweeted, hey, Russia, OPEC, do something about it. And all of a sudden, they took off. They looked in the $27, $28 range where we fell down from. This is like an H pattern. We looked above it twice here. We looked here. We couldn't continue, and we fell back down. And on Thursday, we had a look into that area and came back in. In order for oil to continue higher, I'd like it to come back in. Once it hits that $17 range, I'd like to be a buyer in that area for long-term swing trade positioning in oil, because I believe that $25.50, 52 cents, 56 cents, if you can see 25.47, here it shows you bearish 25.10. This is the bottom of this shadow. Above that 25, 50, 47, 55, 60 cents is going to become more bullish to the upside. What I like to see, if it baselines here and doesn't, anymore fall down, and OPEC and Russia decides, hey, we'll slow down production a little bit because we got too much inventory, I believe the price of oil can come back, to the 30s, 36 range to fill partially this gap and eventually fill 100% of that gap. I'd like to be accumulating oil in the future, in positioning oil. Watch for next week if we fall down and create that H pattern, and if we stay above that 25.50 and we can clear that 27, 28 area and continue higher, we'll go back to this up channel and come back partially to fill this gap. So that's oil. Let's go back to ES. And let's zoom down a little bit. Okay, we can see where we put the ovals in oil. There they are. I mean in ES. We filled that 50%. In order for us to continue, we need to see that 50 SMA and the 61A. If we cannot hold here, we fall back into this channel and we fall back down, below the 2595, 2600. Look for a reversal back down. So this is basically the Fortune 500 company, and what I'd like to do is go down a little bit on a faster time frame by looking at the monkey bars to show you a couple of things, guys, you can use in the monkey bars. Go from standard, go to monkey bars, and on the monkey bars we can see that the highs and lows of that day that we had here on a 15-minute. You can see that the high was 2809.50 and the low was 2701. So if I grab a Fibonacci from low to high, what do I expect it to do? Continuation to the upside. So this was the 2909.79.5. We can just estimate it, and the low was 2701. Come on, a little bit more. One. We'll fix it that way. So I want you guys to remember, I drew it backwards just to show you something. Edit properties. So when we do edit properties, we're going to make sure that we are doing the correct pinning. That's 7, and that's the other one, 2700. So you fix it that way and you push the auto. It goes back automatically. You can see the highs and lows. The puck was shifted in the afternoon. It was at the high. We came back. Most of the time that was spent is down here. So what we do in order to see the extensions to the upside, downside, just by looking at the monkey bars, and you can notice here we spent quite a bit of time as well here. In order for ES to fall below, we don't want to see the 2758 or 68 violated, because it can come back down to the 42 area and continue higher. But what I want to show you is this. That's why I put this. This is the 23%, which is 2835. Remember, on comment where we fell down from was 2853 area, which is up here, and that's your 161 extension to the upside, which is 2876.5. The trend will become more bullish once we clear this area and we clear the 2853.50. So what I want to do is do this invertedly, so you can see the 38% Fibonacci, which is the opposite one that I have here. So what we do, we just remove this one from here. We go back to order. So the 38 should act as support. Remember what I said. So you're drawing this time from the bottom, from the 2700, and you go to the top to the 2809.5. You go edit it. We'll just adjust it 00. This is 0.5. Push OK. And what you can do is basically look at the sentiment where it can go back up to, and look where it's hitting the 2850 area on the 38.2. If we hit the 50 Fibonacci on that extension, and that means my zero line and my 50% fib down here. This is something else from a longer time frame. This is my daily chart from highs and lows. When the ES went straight up and came back down, on that coronavirus, we had the high 33.97 and the low was 21.74. So we retraced back to the 50% fib. In order to continue higher, we do not want to lose the 55 or the 68 area, because that 61.8 should act as support to continue higher. If we come back in, bounce off this area, that's where most of the time was spent, and the second one was here, we should continue higher in the Fortune 500. But what I want you to do as well, there's another instrument you can use, the monkey bars, in here to teach you how to look at the extensions. I have my fib here, correct? What we can do is grab that percentage on this one right here, click it. It says Fibonacci Extensions. Click it. Where's my POC, my 50 fib? It's down here, correct? That's my 50% fib. I grab my pointer. Where was the most time spent? Is right in here in the middle. And if I think the extension is going to go higher, I go to the 0 line, extend it, and this is where I'm supposed to expect, the move going higher. I'll connect it. Then I'll go activate the Fibonacci right here. I'll go activate the Fibonacci, activate the Fib. And what I'd like to do is zoom down to show you where that 200% is. My 200% is here, so when I'm activating this, I'm going to drag that up, the 0 line to the 200. Move my 0 line, where is this is my 0, this is my 100, and I'll come back here and I'll move that back. Let's see, a little bit higher. There it is, that's the center. Let it go. Delete the old Fib. Oops. Come back, come back. Didn't do it that way. Come back. Moment. So what I like to do is grab this Fib. It's not letting me do it, okay? And remove the old one out. Remove drawing. Okay, so my extension is actually 2841, my 0 line. My 23% is 2867, and my upper one is 2883.50. So I expect it to come back in this range. If we're gonna fall back down, I'm not gonna expect it to fall below the 2856.44 area, because I think if it comes back down to this area, it's going to be a problem below the 2740 area, because that should be the 61.8 fib on that extension. I hope this was helpful. So what we do, we come back from here, we go in the style. To bring it back to the charts, we go back to standing index, where it's going to go back up to this area, and the 61.8 would be very identical to that upper area. So what I'm going to do is remove this one, and that's how we look at it. If you look at the 15-minute bars, you can see how the move came in from better. How to look at it. We had that down move, we consolidated, we went and looked above that 2742 area, 36, and we continued higher. We came back, tested the 52 quarter, which was the the value area from a couple of days ago. I'll show you what we did. If you notice that 52, we came back to that area, tested it once, twice. We fell right to it from the prior day, the high. Look at it here. You can see it's, where is that candle? 28, 27, 52, 50. Let's just move to these 2 days. This is very important area, everybody. That 52 area we don't want to lose, and we don't want to lose that 46 area, because if we fall down to the 43, it's going to be a problem, below that channel, and it eventually will fall. This acted as support, and we got a nice rebound, back bounce to the 50% fib, which is on the daily chart from high to low. Once again, the highs and lows were 33.97, and the low was 21.74 from the coronavirus, and we retraced 50% of the move. If this was helpful, please, check us out at SolsticeATR. Give it a thumbs up, subscribe to YouTube, and if there's any way we can help you, following us on Discord live trading room, ask for free, and we'd love to help. Enjoy your weekend. Look forward to seeing you Monday. Take care, everyone.